and I'm staying in touch with Eric and Kelly. Those opportunities self-identify. And so through just normal course of conversation,
Totally fine. Totally fine. It honestly,
Wow, that virtual background you have is like really believable.
that's some great AI. I
it's
love your
really
AI
believable.
program.
Yeah.
Welcome to this week's episode of Getting Down to Business. On the show with us today is Anthony Carrillo, Business Banker 3, Vice President at First Citizens Bank. Anthony works with the Hindley Burgmaier Group on securing loans for dentists looking to purchase a practice of their own. There's a lot to unpack here, so let's start our talk with Anthony and get down to business.
I saw this in your LinkedIn profile. It says business banker, and then there was 3 Roman numeral letters. What does that mean?
So Business Banker 3, there's a kind of 3 tiers, and so I'm considered a BB3 vice president.
VP at First Citizens Bank. Cool. Well, welcome to the show. It's great to have you. I see you have quite an awesome beard. I am nowhere on your level of beard game, sir. So props to you.
I appreciate it, yeah.
Tell us a little bit about who you are and what you do.
Yeah, so I'm as my title explains, a business banker. Really what that entails is the relationship component from all levels of what a dental practice or a business owner would need from a servicing side in relation to banking. So a lending component is probably the most primary component where a client will feel or see the need for my assistance. But that of course is not just where it ends. And so it's the relationship thereafter that I think myself and First Citizens really excel at in regards to, just servicing the day-to-day needs and then those ongoing and future needs as well. I've been with First Citizens now just shy of 4 years. This is my 15th year in banking as a whole. Native to New Mexico, born and raised. And so the relationship that I have with Hindley Burgmaier in regards to how they service their clients and how First Citizens interacts, those cultures, mesh really well. And so I've had a very enjoyable experience working with Eric, Kelly, and the rest of their team.
Is there sort of an ongoing relationship with you and your clients after the sale?
Absolutely. So I maintain a portfolio, and that's not always the case for other lenders. And so those other lenders or other banks will be more transactional. So if you need a loan, you get assigned to a lender, and that lender facilitates a loan, and then you may either be serviced or interact with someone else going forward. That's not the case. So you don't get to get rid of me as soon as the deal is done.
You're assisting buyers primarily, right?
Yeah, exactly. So I'm gonna, those buyers as they make the transition into either a practice they were currently in and now owning, or into a new practice. We're there from a partnership perspective, not to oversee what their decision making process is, but just really to be again a partner and an advisor in that role. So as they are continuing to communicate with their attorneys and their CPAs, we love and like to be a part of those conversations, so we can provide some insight on the bank's perspective. And so as they are looking to grow or expand or whatever the case may be, any potential bank implications can have tax implications and vice versa. And so some of those things, where I would say we're a good partner in that process, where most business owners don't necessarily have the advisement piece that they have access from their banker. And so that's kind of where our relationship component consists of. It's not to make sure that they're meeting certain thresholds. There's monitoring requirements that other lenders may have. We will not. So we're not there again to be the head over the shoulder. We're there to be the partner by their side and to provide any insight that they feel is beneficial.
So it sounds more relationship driven rather than transactional. I would imagine that's led to some pretty good referrals from, customers that you've helped. Also, the Hindley Burgmaier Group, I think you've given them referrals and we've hopefully given you some. What's an interaction sound like between you and Hindley Burgmaier Group? Who reaches out to who first, usually?
I think it depends on the situation. I mean, we are always talking to each other, right, Anthony?
Yeah, I mean, we stay in constant communication. I've got my ear to the ground for sure in the dental community, just by nature. My clients are constantly keeping me involved in what's going on in the community, and Kelly, of course, is very aware of what tends to happen. And so her and I, we'll connect once a week just to kind of see what's going on.
I don't know if you know Connie Aliberto, but we had her on the week before.
Yeah.
And she was talking a little bit about how she helps tenant buyers with, negotiating and securing loans and things like that. So it's really neat to bring in the different players that help move things along. So you guys are just constantly communicating. That's great. You check with each other, let each other know what's going on. So it sounds like you work directly with the clients, or do you just mostly work through Kelly?
I would say Kelly kind of, for the most part, steers the ship, but I'm in direct communication with the clientele through the transaction. Obviously, from the buyer's perspective, Kelly doesn't need to get too much in the weeds with that process. That's really my area of expertise. But in regards to kind of the workflow process, Kelly and I will, kind of, make sure that we're both on the same page, but she's really going to be the one involved in kind of just making sure that we're going through the process appropriately.
Yeah, and it's funny because Anthony and I, when we work together, it's great because we both want the same outcome. We want to make sure that both parties are happy, the seller and the buyer, and make sure that things are moving along the pathway that they should be moving along. And so Anthony and I are kind of like someone said, I don't know if he said it or you said it, tag teaming each other in a sense of like, okay, well, we need this done by this date, Anthony. And Anthony's like, okay, well, I need this done by this date too. So when I talk to the client, I'm going to reiterate that to them. And when I talk to the client, I'm going to reiterate that what he needs to them, so that we make sure that we are consistent across the board of the things that we need from the client, so that they're hearing it from everybody that they need to do these things, so that it moves it along and it carries it through to when it's supposed to close, when the practice is supposed to close. So I think it's kind of like it's kind of like Eric would say, like an orchestra or something like that, where you're on the same page of notes of, how people play in an orchestra. But in a sense, it's just communication is so key, of what is going on day to day, week to week, of how these things are working through it, so that we can make sure that we're all understanding what's going on.
And before I ask the next question, what are some things that you need from your clients across the board? What does that look like?
Yeah, so what I think me and Kelly have defined is that workflow process. And so not only does the bank have particular criteria in what regards to what steps need to be completed or done as we move through the process, but because of our relationship, and we've done many of these over the years, that process tends to be pretty smooth, and it starts with typically obviously client identifying a practice to purchase, getting at least a letter of intent in place, an LOI, and then we start then collecting financials from both the buyer and the seller. And so the bank will measure in two ways, and I'm trying not to use too many banking terms, but we do a global analysis and we do a standalone. And so at that point, that gives me the ability to run all the kind of preliminary analytics to determine, hey, where are we in the deal? Does this make sense for the bank? Does this make sense for the client? Before we spend an enormous amount of time, we try to kind of do some of the heavy lifting early before we ask a lot from all parties. And so at that point, we're not really pulling customers' credit yet, but we're just getting a feel for, okay, let's look at their tax returns, let's look at the financials of the company, and let's make sure it fits within the different lending programs that we have. And we can tailor those, as Kelly said earlier, to be specific and purposeful in how we put together a deal. And so once we've identified whether or not, this meets all the preliminary criteria that we would need, at that point we would ask Kelly and her team to get more formal with the actual purchase agreement and potentially starting some of their due diligence as we work through the final underwriting. Once kind of those both parties have agreed on their end, we've gotten final approval, then it's a matter of just getting through closing conditions, a checklist that we provide to the clientele that goes over that.
One of the things, Anthony, that I kind of wanted you to touch on is because there sometimes is a misunderstanding about a dentist owning a practice. So dentists think, okay, I'm going to buy this really successful practice. The practice is going to carry it. Like I'm going to show what this practice is doing. The bank is going to fund it no matter what. They're going to fund it because the practice is just, it's crazy great. And I'm able to do the work. I can do all of the procedures, but that's really like that is a big part of it. But dentists also have to qualify for the loan. Like a lot of them think, oh, it doesn't matter that I have a lot of debt or stuff like that. The practice is going to carry the loan. Well, that's not always true. Like there are certain things that the actual dentist needs to meet criteria in order to be under the loan. So if you can explain a little bit about that, because I think there is a misconception out there that I'm someone and I have $1 million of debt and I'm a dentist and I want to go and buy a $2 million practice that's going to pay my debt, obviously, once I own the practice. What do you guys look at when you see that? When you see the $1 million of debt on the dentist?
Yeah. So to touch on that, the biggest thing for us, and I've worked for other banks with dental specific lending programs. There's not a particular threshold in regards to how much debt we will allow a client to have or we'd like to see. There's not a specific percentage of liquidity, meaning just cash that on hand that we would like to see, where other banks do as well. And so we look at it holistically, and we sit down and we have real conversations with our approvers and say, hey, number one, we love dental deals, and number two, we're going to use common sense. And so if we get to a point where we believe that we're going to have the potential, if there's a hiccup at all in the company, to put not only the business in jeopardy, but their personal livelihood, and these docs have families and other things involved on their personal financial side, where we can put them in a position where, something could be greatly affected by a small, dip in performance or something in that event, then we're probably going to be hesitant. And so, there's not a fine line as to what that means. You can only have $700,000 in total personal debt. That's not really the case. We'll look at it and sit down and have a real conversation with the client as well, and say, hey, this is where maybe where we're concerned, and this is kind of what we determined to be maybe a current hurdle. Is there any mitigants to this? What's the story behind it? How did this happen? And kind of go through that process. But as Kelly said, there are many occasions, or not many, but there are often occasions where a doctor is making a current level of income as an associate, but where they may be a slightly overextended. And so once we factor that their existing debt in with a new debt that this practice will now have to carry, those ratios that we look for tend to get weighed down. In addition to that, every bank will typically stress test a dental deal during an acquisition. There's historical evidence that, not always, but in many cases, there is a small revenue trend in the declining range, and so we stress those at a small percentage. And so when a client does their own personal EBITDA or cash flow calculation, they may determine on their own that it does just fine, and there's no concerns. Any bank, every bank, SBA, regardless of who it is, will stress those loans. And so I think just making sure they're aware of what that looks like.
Right.
We're definitely not the most conservative in regards to other deals versus dental. We actually are pretty open because the default rate is extremely low. But with that said, it's not just I want to buy the practice and every bank in town would love to have my business. Most banks would love the opportunity to try, but they're probably going to get more no's than they foresaw, unless they're working with someone who's, number one, done dental deals before, has experience in the industry, knows what questions to ask, and is working with a bank that in that same capacity that knows the industry well, knows the market well, and can really tailor a deal to fit.
You guys sound like the opposite of the car salesman, where they're just like swarming the parking lots looking for a buyer. You guys are way more picky. You're fair, but you do take into account a lot of the things that you mentioned. I had a question. You mentioned that you look at once the LOI is submitted and it gets down to looking at the financial documents and performing a due diligence. Rachel here is our evaluation expert. So how do you two interact? Does First Citizens Bank look at the due diligence report that she prepares? Does the bank have its own process of creating its own sort of buy-side due diligence? How do you interact, on
Yeah, good
the
question.
analyst side?
Yeah, and so I've worked with Kelly even at a bank I was with prior, where we required evaluation to be completed by a licensed, company on any deal. First Citizens is a little bit different in that regard, which I think is a better balance, where we're not going to ask or require them to do an extensive amount of due diligence. And this is more working with other brokers. Kelly and the Hindley team do a fantastic job. They do that. That's part of their process, and they don't really do a deal without it. Speaking on them specifically, Rachel and I, don't have a ton of interaction. I review the reports, and then our internal approvers or reviewers, number one, what they're looking for is that there is due diligence and there's an explanation as to how we got to a value. We're not going to nitpick as to what the, I don't think of the term, sorry.
The process of
Take your time.
Yeah, the multiplier or whatever
Yeah.
may be that's appropriate for that specific industry, or we're going to be more concerned on the debt service ratios that we would need, because at the end of the day, if they can't pay the loan back at a particular ratio, then we're just never going to be there regardless. And so
Is that what debt service means?
Yeah. So the debt service coverage ratio is the simplest way is for every dollar that they spend, and that's overhead, salaries, wages, inventory, etc. However, we'd like to see $1.25 in return. So it's a 1.25 times debt service coverage ratio minimum that we need after, again, the financials are stressed, and we factor in all the new debt, their existing debt on their personal side, those types of things. And so that's on a an annual basis. So it's not going to be specific to their total obligation, whether or not they owe $1 million personally. We're going to want to see what that total monthly expenses essentially, and what that looks like over each year when measured on those financials.
I think when we touched on the income statement in one of our episodes, it's sounding to me like you're looking at the operating expenses for the practice.
Yeah, so we'll factor in more of what's in a traditional EBITDA calculation. And so those are very easy to do. Kelly can knock those out quickly on their end as well. Again, there's a few things that we'll incorporate into ours.
So their calculations are for the doctor and their life as a whole, and our calculations are for the practice only.
Correct, exactly.
Yeah,
Right.
that's where the big difference comes in when I was asking about what does the bank consider with the doc that's trying to buy the practice. They look at that, and I think that, like what you just said, Rachel, how we look at it is we look at the practice, and that it does carry itself. When we say this is what it is, it carries itself. But when we introduce the bank in the scenario, the bank considers everything. Like they want to make sure that it is, that you're going to make your payments basically. And it's going to be in a comfortable situation. So in addition to that, when there's a practice that has a certain type of income, that has one doctor and they want to stay on as an associate, and the other doctor comes in and wants to also work the practice, there's some issues that could arise in that situation as well, if those numbers are good for the bank. Like sometimes, because Anthony just said, about salaries and things like that. I mean, they include that if it says in the purchase agreement or in the letter of intent that the seller wants to be an associate, can that practice hold both of them or support both of them and still pay debt service and the things that need to happen? And sometimes, Anthony will come back to me and say, actually, we can't do that. Like, we can't have the seller as an associate. It needs to be only a one doctor practice. So, I mean, there's certain things that go back and forth that we talk about that, he tells me, a way, or this is the way that we're going to be able to do this, so that I can help with negotiations on the seller and the buyer side and say, well, if you're going to sell this practice, you're not going to be able to be an associate because it's not going to be able to sustain you and the buyer in both of your income. So, things like that, like that's how kind of when we work together and we strategize on how these deals can be made, that's kind of what we do so that, that the seller can move forward. Sometimes the seller doesn't move forward and they're like, well, that's what I want to do. And,
Yeah.
and then they just stay working in the practice. I mean, there's always ways, I think, that, as long as we know what those numbers are, we can work together with the doctors on that.
Last week we had Connie, or not, it was 2 weeks ago, we had Connie Aliberto talking about, the real estate side of things. She talked about how important networking was for her business. And I'm curious, because you do talk a lot about, I guess you could call it aftercare of, post-sale, keeping that relationship going with the client. But in your industry, how important is networking? And do you have any particular strategies that you use to help build and maintain that, that professional network?
Yeah, probably similar to what others you've seen in New Mexico. My bias is that relationships and meeting face to face goes a long way. If I just sit in my office and wait for a phone call or referral to come through, I probably will get a handful. But if I'm out in the community and I'm working with brokers and I'm meeting with Connie and I'm staying in touch with Eric and Kelly, those opportunities self-identify. And so through just normal course of conversation,
Totally fine.
Wow, that virtual background you have is like really believable.
That's some great AI. I
It's
love your
really
AI
believable.
program.
Yeah. So I think where I left off is kind of where those identify more organically, and so it's not cold calling and walking into a doctor's or dentist's office. That just doesn't unfortunately work. They're meeting with patients. If a guy in a suit walks in with a beer, they're going to probably I'll probably get kicked out the door pretty quickly. And so the best way for me to not only get referrals, and I think the best way that I share referrals is through involvement in community and being a partner that adds value. And so whether or not I get the deal or whether or not it goes to someone else, I think I can provide some pretty good insight as to either what makes sense for the client. For those clients that Kelly had mentioned that it didn't work for them today, but 6 months from now, we helped and got them prepared to buy a practice. Those are my best referral sources, right? So it's not a banker saying, hey, we can't do the deal. I'm sorry. It's us still working with them through the process and helping them get to that stage, whether it's down the road. And so my clientele tend to be the most of my referrals. And I would say, probably that's where Kelly and her team get most of their referrals as well.
Anthony does help us a lot on the practice transition side, but he also helps us on the accounting side. And what I mean by that is because he does more than just provides a way to fund transitions, he also provides a way for doctors to consolidate debt and to assist them with growth of their practice by doing things like that, or strategically working on combining certain things so that they can, possibly afford to expand or, do things like that. So he is really involved, I think, with, his clients and with our clients, because there's a lot of clients that we have that need assistance with stuff like that. And we have plans that we have built out with our clients that have that as a part of the component of it. And Anthony has helped us a lot with those types of things with our accounting clients. And maybe he can talk a little bit about those kinds of extra things that he does. That he can do.
I appreciate it, because that's probably 50% of what we do is the acquisition piece. But again, the reason that I think we're a good partner through the process and after the deal is done is we assist in whether they need initial equipment needs either now or down the road, what the real estate component will look like if they have a desire to own their own building, or if they're going to continue to lease and they want to improve that lease space, assist with all of that. The second piece of that would be the consolidation or looking at restructuring any existing practice debt that they have. And so as they look at growing, either freeing up cash flow in order to do so, or helping maybe get that debt paid off sooner and not dragging it down the road any longer than necessary, is really where we can help.
How long are the loans typically that, when a practice is for sale, like how long do they typically have to pay it back? Is it spread over a certain amount of years or?
Yeah, 10 to 15 is very typical. So we can do somewhere in between there or shorter, of course, if they'd like.
Unless it's an SBA. SBAs go about 25 years usually.
There are some nuances to SBAs. Those will typically be a floating rate. And so you may not know what your rate will be in 6 months or in 5 years. There's sometimes different tiered market renewal periods during that. And so SBA is a great component. I'm a preferred SBA lender, and so we assist and facilitate those. But that doesn't mean that's the best program. If we want to look at just what the smallest payment is, SBA may be good for a few years, but it may not be good long term. And so we can kind of, again, tailor it to see what makes sense. And it can be a combination. So if they're looking at buying the real estate and the SBA program is better for the real estate piece and our conventional loan program is better for the acquisition of the practice itself, we can tandem those as well.
Interest rates are pretty high right now. Does that factor in at all? And have you guys noticed any reluctance to try to secure loans these days, or is it still pretty much business as usual?
It's been pretty business as usual. Especially on the dental side, I would say we're probably one of the most competitive, not the most competitive. And so as much as I love talking about rate and as important that is in the process, I think that there's other pieces that add value. And again, that's kind of where, I like to hang my hat is on the relationship side of things. We're not just going to be the cheapest in town, and that may not always be the right fit, and that's okay. And so, if we're the right bank and you see the value in that relationship piece, number one, we still will be very competitive rate, but in some cases we may not be the cheapest, and we're okay with that.
Great. I guess before you go,
I have a question.
Please.
Because our calculations differ in where I said our valuation or due diligence covers only the practice itself, and the bank looks at the practice and the doctor's financials as a whole. We, Hindley Burgmaier Group, when we do our valuation, we like to look at 5 years of data, and I'm interested to know how many years the bank likes to use.
Yeah, we lean on 3, and so we'd like to see a 3-year period.
What if the current year you're in isn't a full year? Like, what if it's not December?
Yeah,
will you annualize or use a partial year?
We absolutely will. The minimum requirement is 2 years tax returns, and so as long as we have enough of a year to justify us being able to annualize, then we would be totally fine. But 2-year minimum tax return is all we need.
Okay. We are in 2024 now, so I guess if you use 3 years, it maybe doesn't affect you anymore. But I know a lot of our clients are concerned about how COVID affected their practice and how that may impact the value of their valuation. So do you run into that, or?
Yeah, we did, especially the last 2 years. I would say, I think we've gone through that date range where it really comes into play with our underwriters. But with that being said, we take that back. What would be considered any sort of one-off expenses or effects to the company. And so if prior to shutdown they were doing X, during that year we were kind of analyzing just those months of normal operation, and then we were obviously factoring any support, whether it was through PPP or EIDL, and adding that back to their bottom line. And so we really didn't have issues with getting deals done because of those circumstances. Most importantly for us, at least in the last year, was seeing them be able to get up to what would be a normal trend or stabilized trend for them thereafter.
Okay, I was just curious, how that comes up in conversation for you, as it's pretty common in conversation for us. people who may have been ready to retire around the COVID time, and now they're like, oh my gosh, I'm going to have to work for a few more years because I don't want COVID to impact my value. And we say, if we can justify that your practice has bounced back from COVID, then we'll exclude the COVID year altogether, so it doesn't negatively impact your value.
Yeah, from a regulatory standpoint and from auditors, we have to collect those financials, but in regards to our decision making, we're not going to lean as heavily on those, especially now that we're gotten past through it and we have a couple of other year's tax returns to really lean on.
Okay.
Before we sign off here, is there anything that you would like to share? Maybe something to anybody that's thinking about, purchasing a dental practice. Any quick tips or just a message that you could share with them, maybe encourage them to work with you?
Yeah, this would be my number one recommendation is to start the process early. There are, again, many cases where I'm working with a potential buyer who's already a practicing doctor who would like to buy a practice either in the year or next 2 years or 3 years or longer. And we can sit down, we can go through, some financial exercises to determine where they are personally, and then let them kind of get a better understanding of what the financials would need to look like on a potential practice, and maybe either a dollar amount that we need to kind of find and fulfill. The practice itself is going to be, our primary component, but getting them prepared on their end is going to be crucial. And so just starting the conversation earlier, the challenge that I think Kelly and I can sometimes come to is where we're all kind of running a fire drill. We found a client who said that they've been associate, the doc was ready to sell, and neither one of them has been involved in the process. And so just getting a little bit ahead of it so everyone kind of knows what to expect makes things go the smoothest. So if you're interested, have questions, want to kind of get a gauge on what that would look like, I would love to spend as much time or as little as time with the potential buyer as early as they'd like.
Great. We're gonna include your LinkedIn profile, and I think you have a website too. I think I visited that, but so people can find you easily. Thank you so much for joining us today. We really appreciate you and your insights into the lending world. So we wish you well and good luck at your daughter's function. I think that's right. You were going to graduation, or what was it?
Not quite. She's 6 months, so nothing.
Graduating.
Well, I appreciate it. Thank you for having me.
Thanks, Anthony.
Take care. Bye-bye.
This has been Getting Down to Business, episode 7 with our guest, Anthony Carrillo. We've included Anthony's social media links in the description, so feel free to check him out on LinkedIn and his website if you're interested in learning more about utilizing his services. We thank you for your time and look forward to diving further into dental practice transitions and learning all about how to execute them successfully on the next episode of Getting Down to Business.